Hey guys, welcome back. Patrick here. Wow, did you see the earnings for Lion Electric and Lightning eMotors? Oh my goodness, it is stomach churning being an investor in those companies. You're like, oh my god, how are they ever going to get to those projections that they have for the next few years? So in this video, let's take a quick look at the earnings. I mean, there's some good things, there's some negative things. Let's take a quick look and also why I'm still bullish on those companies, even though you do need to be very, very cautious. We'll have to track these very carefully because they're so far from their projections, and that raises a lot of questions. By the way, Tim Reeser, I asked him on Twitter before, when are they going to implement the second shift? He never answered. I mean, we need to know when they're going to be ramping up the production because the numbers are very low right now. All right, let's get started. But of course, please like and subscribe. It really helps the channel out. Alright guys, keep in mind that today most of the electric vehicle companies were green, except for Tesla that was down over 2%. But there has been great news, right? Like this one from Mr. Recall himself, Governor Newsom in California, that has a plan to invest $3.2 billion in the electric vehicle industry. So we don't know if he's going to win or not. Maybe Kevin from YouTube is going to win. That would be pretty funny. But if this plan ever came to fruition, I mean, it would be 1,150 trucks, 1,000 transit buses, and 1,000 school buses. Well, think about which companies would actually benefit from them, from those contracts. It is, of course, the companies that we've been investing in, companies like Lightning eMotors, Lion Electric, Proterra, companies like those. So always remember that, yes, I know over the past few months, it's been really, really tough, right? A lot of our companies have lost a lot of value, but still, our investment thesis is exactly the same today than it was a few months ago. A lot of these companies are going to benefit from government mandates forcing fleets to convert to electric vehicles, and they're also going to provide subsidies and incentives. So yes, I know in the short term it's rough, but long term our thesis hasn't changed, and it is things like these that are really going to help make our companies go up over time. So just keep that in mind. Don't lose faith, right? It's just a matter of time. So if we look today, what happened in the market? Well, the market as a whole was actually down, both the Dow Jones and the Nasdaq. But all the electric vehicle companies were up, so that is a bullish sign. It means that money was outflowing from the market and into this kind of asset class, the electric vehicle companies. And we haven't seen that very often over the past few months. So that is a bullish sign, but of course it's only one day, so we're going to need to see how it plays out the rest of the week and the next few weeks. But at least let's take it. We had one good day so far. So Lordstown up 15%, Lion Electric and Lightning eMotors 10-12%. So that is very positive, but we'll have to see. I'm not convinced quite yet. I'm going to need a lot more confirmation, especially when you see Lion Electric, right? Yeah, it is a nice little spike in price, but it is mostly based on today's news. It's not based on a lot of strength with the company quite yet. In fact, I personally expect several quarters of pretty strong weakness for this company. So if you look at MACD, it hasn't quite yet crossed, right? And I don't think it will or anything. But the big problem with this company and the other ones is that they have good news, up 10% based on a new contract by First Student of 260 school buses, right? But they don't have revenues to back that up. So there is a lot of uncertainty around these companies. Yeah, in the future they might be successful, but they might not. We don't know, and that's why it's very difficult for Wall Street to get behind them until they establish themselves, right? So if we look at the actual earnings, they only delivered 24 vehicles in the first quarter of this year. So that means they deliver one vehicle every 3 days. That's not a lot, right? 6.2 million in revenues is very little for a company that is currently worth over $3 billion. I'm fairly consistent, I think. These are the exact same things I said about Hyliion a few months back, right? When I said, hey, watch out, the company has only delivered 13 units in 2020, and then by the end of the year, they managed to get another 7 for 20, right? But these are very, very early stage companies, and they're really boom or bust, right? We're projecting that in the future they'll be successful, but we really don't know. So that's why we need to stay very cautious about them. So on the plus side though, right, they do have 817 in their pipeline. So that's what we were saying, is that right now, if we look back at these companies in the past, they suck. If we look in the future, that's when we have a little bit more optimism. So 817 in the pipeline. They just delivered 10 Lion 6 to Amazon. So that's the first part of their contract. And this was right after the end of the first quarter, meaning that these might actually show up in the second quarter. I'm not exactly sure when they got paid for these 10, but if it's after the first quarter, it should show up in the second quarter earnings. And that would show a lot of growth from one quarter to the next. So that would be very positive. I don't expect a lot of movement positively over the next quarter because of these small revenues. But if after the next quarter we can see a fairly strong growth, let's say they go from 24 vehicles to 200, well then that's going to make people a lot more serious about the company. If they go from 6.2 million to 50 million next quarter, then that's going to catch people's attention and believe that they might actually deliver on their promises. Because think about it, their projections for 2021, this is taken straight from their investor deck, right? 650 units sold and then 204 million in revenues. How do we get there from 24? So they need another 526 units and 6.2 million. They need another $198 million worth of revenues. How do they actually get there? I'm looking forward to both companies, the CEOs telling us, hey, we're ramping up production right now. This is how we're going to meet our projections for next year. This one, they didn't talk a lot about the guidance, but Lightning eMotors did, and they actually lowered their guidance for the year. So far, this company has been a disaster for the shareholders. There's no other way to say it, right? It's up 12% today. I'm not exactly sure why, because it's not like they announced a good partnership or a lot of sales or anything like that. There's just been constant selling pressure on this stock. And it's not the company's fault, right? They negotiated a valuation, but the market is clearly rejecting it and not really believing in the business model. I mean, think about it. Unless you bought this company at the very bottom at $6, right? No one else is positive with this stock. Everyone else is losing money. And that is very frustrating because there's nothing wrong with this company, right? It's a good little company, right? So personally, still believe they're going to do well in the future, and the earnings aren't that bad. It's just the projections that I'm not super excited about. So 4.6 million in revenue in the first quarter. It's better than Lion Electric's, right? Because Lion is worth $3 billion or more, while this company is worth about $600 million, so 5 times less. So the fact that they're almost even on the revenues means that, they're kind of starting from the same point. They actually delivered 31 commercial electric vehicles this quarter, which is better than Lion's, right? So the company has some things going for it, but at the same time, these numbers are still very, very low. Same problem with Lion, right? So if it was just for these, wouldn't be too bad. I mean, there's nothing wrong with that, as we were talking about. Since they're only worth $600 million, that is their biggest benefit, is that they don't need to wow the analysts. First of all, there's probably no analyst on this company yet, right? But they don't really need to put up spectacular numbers. They just need to match expectations. And I don't think that they're going to right now. So 4.6 million, that's what we were talking about. They delivered a lot of different types of vehicles. The shuttle buses, I think, is pretty much their specialty so far based on the Ford Transit. The delivery vehicles also, they seem to be selling those a lot. Then they have refrigerated trucks, ambulances, RVs. Didn't even know they made RVs, right? So they're doing a lot of different types of vehicles based on the Ford chassis, and they're modifying some of them. However, the thing is that when you look at the actual projections for the rest of the year is where it gets a little bit not as positive, right? So they're talking about the shortages, but XL Fleet talked about that too. We don't really care about that as investors. What we care about is projections and are they met or not. I don't care how they get the supplies or not. If they don't, the share price is going to go down. It's going to hurt us, right? So revenue is in the range of 50 to 60 million and vehicle and powertrain sales of 500 units. Well, here's the problem, right? Yeah, extreme supply chain shortages will have a significant impact on short-term margin and operating costs. Well, that's not what they said last year when they made their projections. 63 million, right? So they say they might get to 50 to 60 this year. So again, that is a cut of what, 10 up to 20%. And they were talking about 600 units, right? While now they're only projecting 500 units, right? So that's a pretty big decline also of about 15%. So that's the negatives. I don't think they're going to meet the expectations of their own projections from just a couple quarters ago. But on the plus side, they too have a pretty good order, right? So they have a backlog of 469 million and a sales pipeline of 807 million. So that's the positives for the company. I mean, again, because of the lack of revenues and everything, I don't think we're going to see a big spike in price in the short term for either of these companies. It's all going to be based on, is there any positive news that day? It's going to go up, and then over the next week, it's going to fall again. I mean, that's what we've seen over and over with this company, right? Like here. Same for Reliant Electric. So that's my assessment of these companies. I don't expect big things for next quarter. Hopefully in the second quarter earnings, we're going to see those big sequential growth. And that's what's going to really wow the market and make the share price go up. But in the next 2-3 months, be ready for more pain, in my opinion. All right, guys, let me know what you think. Are you out of these stocks? I mean, do you still believe in them? I believe in them long term, right? Because of big mandates by the governments and all of that. But in the short term, I mean, it doesn't look very promising.